This week there will be second quarter GDP numbers, but do not expect much. It's only some 40 days till US election, and the numbers will be revised after the election. We like to be realistic, and you are listening to the StockInvest.us podcast Trading Tips with Jim, where things like elections are one of the things that we try to bake into the equation, guessing what will be next in the stock market. Last week I said I thought it would be a boring week, and a week I didn't expect much. The Fed, of course, they cut the rate by 0.5%. Market didn't move much at all on the day. It was little volatility in the beginning, if I remember correctly, it ended red, but the day after, markets had a very strong day, bringing Nasdaq actually into a slight plus of 1.49% for a week as such, ending at 17,948, and we are getting very close to the huge resistance at 18,300 points. Dow Jones had a little bit better week than Nasdaq, up 1.62% for Dow Jones. And this is the question: what will happen next? Will we push up to the resistance at 18,300 or are we in a situation where we push much higher than that? I will try to answer the question as best as I can about the week ahead of us and maybe a few further weeks ahead. Because if you look at the chart, I told you that Nasdaq is within a falling trend, has been so for several weeks, and nothing indicates that it will break out of this trend anytime soon. The first chance will be if we see a significant break above 18,300 points. If that starts to happen, I will change my tone and get a little bit more optimistic. Until then, you can expect that the markets either are turning down where it is now or try to do a little push upwards to 18,300 before continuing down. Looking at all sorts of signals there, they are getting very close to topping out, meaning that we are at levels where things are getting close to overbought and have natural reactions down. Should it happen, there will be some support just below today's level, so it means that we can have sideways movement, or next will be at 17,000, later at 16,500. We have to bring in some good things, of course. The good things is there is a buy signals from the moving average, both short and long in the chart, and also the golden cross, not the star, but the golden cross is signaled. Sometimes these can be very long, but in general it's a good sign. The one thing that worries me a bit is the huge increase in volume on the end of the week, especially Thursday and Friday. While Nasdaq showing signs to top out. Previously, when the same thing has happened, we have this high volume in the market, we are at the top. But nobody really knows. I'm just trying to give a qualified guess of how I think things will be. Ask me personally, I will not bet heavily into the week as such. In fact, I will be on holiday in just 2 short days. I will be off to Turkey for 2 weeks, enjoying my holiday, and I do not plan to stress about the market because that's my personal view. I think markets will be slow in the forthcoming weeks. Hopefully I will be wrong. Looking at the week as such, what are the things that can move the market? Well, I already told you that quarter GDP numbers, the second quarter, will be in on Thursday. The expectation is 2.9% growth year over year. And I believe it will be more or less around the consensus. I will be very surprised if it goes very low. As I said, it's election year, and you don't have to be a conspiracy theorist to understand how these things works, because we have seen this in job numbers everywhere. You know, the job numbers are good, then a little bit later there is very heavily revised numbers, which is just toned down. Early this summer, for instance, the job numbers were revised down by more. It was 880,000 jobs, I think, for the general sector. So it's been the classic symptom all year. Numbers come out, look good, later being revised. And I think the same thing will happen for GDP as well. Thursday will be, as I said, the number, but also on Friday there will be more numbers about inflation. And as you know, I say that I don't think we are done with inflation at all. I think we will head for stagflation. It's been my opinion for a very long time. My argument for these things is that now we have felt the cooling of a very high energy price, especially oil. Oil was up around 100, even 120s for a long time, staying up above 100, then a long time about 90, then falling down to, it was I think at 66, 67 last week or the week before. Again crawling up, and with the tension in Middle East, if these things escalate, everything indicates that it will, oil price should just continue upwards, and that will continue to push the inflation on all ends, and there will be left margins, profit margins, meaning that the offset has again to be on the customer. You have to understand that looking at quarter numbers, all the increase or the inflation over the last few years, which just in a country like Lithuania is, I guess, up to 40%, 50% over the last 3 years, because it was 24 just in a single year. 2022 it was 24%. These things, they have to be offset. So the companies, they reduce their profits, and we see this in the quarter results. Then they start to shrink the products, so-called shrinkflations. And they just shrink and shrink, but at the end of the day they have to somehow get back into profits, and we see this across all of Europe. In US, big companies like Volkswagen is scaling down, everyone is scaling down, they are shutting down factories, they are reducing people, they are trying to reduce the cost even more. On top of this, we see the increase continues at different products, but it takes some time for the market to absorb this and reflect it and show it back. My guess is that the oil price will push up, and I said last week I think energy sector is a good sector because it is oversold, showing a great deal of buy signals. I still believe that is where I'm putting my current bet, that oil will push hard. We will get into a conflict in the Middle East. We had these Patriot attacks, Hezbollah been struggling, Hamas been struggling. At some point they are going to go all in before, right now they are on the losing end, and at some point they have to try push it the other way, either supported by Iran or otherwise. Anyway, I expect heavy escalation. Hopefully just for a few short days, but can last a little bit longer, where they will try to give a push, getting things back to a better playing field. And doing so, I guess there will be so much fuss in the Middle East that the oil price will just skyrocket. I personally will not be surprised if we, within me returning from Turkey in a little bit above 18-19 days, seeing oil price around $100, will not be surprised at all. It will not be good for inflation, it will not be good for us at all. So let's hope that everything will just stay calm, that the oil price actually will go down. It's for the better for the economy. But that said is my guess. Oil went up $2 last week to 71, from 69 to $71, while gold continued upwards by $20 to $2,643. Currently gold sitting at $2,643, and as you know, I'm very bullish to gold. I advised you when gold was $1,600 per ounce, get into gold. I've been telling you over and over again. I'm still in gold. I read many now say that gold will go down, but I am personally not sure. Of course, it's time to consider to maybe take some of the very nice profit which been in gold, but I see so many signs why still to stay in gold and why gold is cheap. And as you know, my first target was 2,500. I have increased it to 3,500 for the gold. 10-year treasury yield, which usually been spot on if market is going up or down, actually increased last week by 2.14%. Currently sitting at 3.73. You should think that it should go down, but it actually went up. Maybe we will see market is not so sure about the interest rates path as we move forward. Companies cutting people, prices going up, shops being closed. it is a situation, but we will hear Fed on Thursday saying everything is okay. It will be a super week. It will be a super month, and it will be a super year. What else can they say? But there are really weakenings showing in the economy. And over and over again, they are talking about soft landing, soft landing. And hopefully they smoothed it out. But Germany, for instance, is in deep crisis. The industry in Germany, being the locomotive of Europe, been struggling and struggling, and everything is indicating that they will struggle even more. We have buried ourselves down in the basement. Hopefully everything turns and we are in for years and years of good markets and economy. Anyway, that's my guess, and one thing that I like to look at is consumer behavior, because it gives a good indication where we are, and I argue that over time that's where you should see how things are, and that the consumer will change behavior. And we saw this happening, with pizza and all of these things. This week there will be two in the retail and AutoZone on Tuesday, and CarMax on Thursday. So we'll see how all the men and women that really likes to take care of their cars, how they are doing. Are they slowing down their purchases of polish and car parts, or is it going up? Will be very interesting to follow these two companies, Tuesday and Thursday, for AutoZone and CarMax. On Thursday we will have another company that can give us a slight idea, and that will be Costco. Very interesting as well. And a small little favorite of mine, BlackBerry. Much more about the history than the company as such, but BlackBerry will also be on Thursday. And Friday, as I said, will be some inflation numbers with the price consumer expenditure numbers coming on Friday. And meanwhile, like every single week on Thursday, there will be job numbers. And they are expected to come in, jobless claims are expected to come in at 219,000. I think that they will juggle between GDP and work numbers, so maybe we'll see work numbers at 230 plus thousand this week. Jobless claim number will be, I guess, on the upper end this week. GDP will come in okay. That's my guess. What do the signals say? Well, the signal says that across all markets there is 33% buy signals. It is on the upper end. Nasdaqs remain at the same 18%. That is because many tech stocks are not being able to follow the market. They get held back, and it's expected to do so, and that has to do with also the consumer change behavior. We are getting out of subscriptions, we are reducing the amount of subscriptions, we are trying to tighten up our personal economy, because 4 years of pain, or 3.5 years of pain, have taken a toll on most people, not growing their economy, and you just have to start tightening, and subscriptions are one of the things that people are tightening in. And that goes directly back to the tech stocks, especially, which have, to be fair, had very, very strong years. But we're seeing a shift now. New York Stock Exchange still remain very high, 45% buy signals for New York Stock Exchange. That is way too high. London more sober at 24, Frankfurt at 32, Tokyo up from 16 to 29. As you know, I said 3 weeks ago, I believe, that I would personally put some money in Asia, so I did, and that's been very, very good choice indeed. Just up from 13 to 20% buy signals, while National Stock Exchange of India is down from 41 to 28, and overall NSA, the index for National Stock Exchange of India, had just a super week last week. I thought it would be totally opposite. I thought NSA would fall more than Nasdaq, but in general Asia is doing good. Countries, the BRIC countries especially, they are on the growing side of things, while Europe and G7 most are struggling, so they are celebrating I guess good economies, good times. And India is a small little favorite of mine, because I think it's a huge upside for the country as such. By the way, it was a golden star in the NSA index chart back in early August, really been following up that signal. Nasdaq, I mentioned, showing a falling trend, but currently having buy signals from short and long-term moving trend. For the week as such, to sum it up, there is a good chance there will be an upturn. Why not up to 18,300? Trying to push some good narrative these last few weeks for the election, pushing the market upwards. But in general, I will actually go for a red week this week in the markets, feeling that I can be very, very wrong, that we will see the opposite things. But I will bet on the high volume. I will bet on the high amount of buy signals at New York Stock Exchange. It's not a good thing when it's too buy. And if we look at the market temperature, getagraph.com, we can see that we are getting close to overbought on the signal. It's been very, very accurate predicting tops and bottoms. It's not predicting a top. Needs a little push up, could indicate that we should go up to 18,300 before market starts on second downturn, but in general getting very high. So my bet is it will be a red week. Then it is the $1,000 challenge, and how are we doing? As you know, I went into fate at 341. Fate last week was up at 402. In last week's podcast, we had 17% profit. During the week, Fate was going up at 410, 420 or something, then fell a little bit back, ending the week at 387. I'm still in Fate because to me it looks good. It is, sadly to say, these things that easily can go down to the purchase price, and 2 times now been up at 20%. So if we were trading up and down intra-week, but as you know, I do in this portfolio, the $1,000 challenge, where I started with $1,000, currently sitting at $3,452. You've been following the ride all along. I do not buy a stock before telling you which one I will buy. I will tell you exactly approximately where I will buy. Usually say that I will buy half an hour after trading open, because that's usually the good spot. So I will tell you on the Monday before markets open, and I will buy early in the Monday. Currently sitting in Fate. I do not plan to sell Fate yet. I think there is more to come in Fate, and I cannot see very solid options. Fate, high risk indeed. Consider it good. While remembering it, I will repeat what I've said before. I believe electric vehicle looks as a good place to be. If markets go down, they will go down, but I've been picking now for 2 times picking EVs. I will use this week to pick a little bit more. As you know, I'm trying to find the bottom. I don't care exactly if it's the right spot, because nobody really knows. But to me, EV look very, very attractive, and NIO going up, for instance, from 380 to above 5. Of course, made my average start to look good, but I'm planning to get in a little bit more, because in the long run, despite many companies saying that they're slowing down their EV projects, it is the future. I think these stocks have been hammered way hard, and they are slowly converting their businesses into efficiency. They are finding the right models. They're fine-tuning all their operations. The margins are going up and down, depending, of course, the price that they have to push, because now they've been fighting for market positions, but there are some big players in the market. I think things are starting to settling down, meaning that I think, personally, that we will see more upside in EV companies in the very, very long run, not the short run, but the very, very long run. I think EV is a good place to be. And you have to remember that following this podcast, 5th year of doing this podcast, if we go to 3 years back, you heard me say the opposite. Tesla was above 2,000 before the split. NIO was up around 60, if I remember correct. And I told you this will just be hammered down. It's the worst thing. It's overvoted. It is overhyped. It has to come down. Now I am on the opposite end of the scale. When everyone says that you should go out of EV, I think it might be a good opportunity. 20 minutes didn't become a very long podcast this week. As I said, in just 2 short days, I am off to Turkey to enjoy 14 days of sun and good temperatures, hopefully. Doing absolutely nothing but relaxing. Good for me, of course. In the meantime, I hope you will have a splendid time in the market. I hope the markets will be good, of course I do. And I hope that you will have your portfolio grow every single day, and that when you get to the end of the week it's much greener than in the beginning of the week, that you will have one success after the other. Remember to use the tools that you have available. We have made a lot of them on stockinvest.us. You will find tons and tons of tools that will help you in your trading, and hopefully you will be back when I will be back after a holiday. Until then, just have a few super weeks. Bye.
Welcome to stockinvest.us stock analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon stockinvest.us. By using the information you agree and are held liable for your own investment decisions.